Hello, everyone. Thank you for joining us on this special episode uh, on Stocker Team, the Investors Channel. Welcome to Stocker Team. Today, we are talking about StubHub IPO. StubHub Holdings will be, launching its initial public offering in the U.S. stock market, and that's why we are bringing you all the behind-the-scene information, what you should know about StubHub as a company, the valuation, the business model, the competition, and everything that you actually need to use to either do your own due diligence or more or less do more research to see whether this IPO is something you should be looking at to buy. Uh, Before we go ahead, let's just make a usual disclaimer. Every information shared on this channel is for information and education purpose only. So do your own due diligence or consult your financial advisor before making any decision. On that note, thank you so much for watching this episode. If you haven't subscribed to our channel, subscribe, put on your notification bell so that you don't miss any updates. You can also join us on Stocker Team Live on X. We will be announcing our social media handles for TikTok and as well Instagram. We're coming to you how you want it, where you are on social media. Stocker Team will be there with you shortly. In the next couple of days, we'll be announcing the official handles so that you can also gain access to this market moving information that add value to yourself and your portfolio. So we'll be getting into the show just immediately now. Join me. So before we go ahead to analyze anything about the business StubHub Holdings, the company, it's always better to actually know, the history of a business, the history of a company, especially when they're coming to the market for the first time, so that you can actually see the background, the thought pattern, the kind of movement, the growth, the trajectory, the challenges that this company has faced, and how far it has come before you can actually start doing your due diligence to look at the filings, the balance sheet, and all that. So, looking at the history of StubHub, StubHub was founded around 2000 by Eric Baker and Jeff Floor. They started as an online marketplace where fans can actually buy and sell tickets for live events. Actually, the growth in that kind of business was part of the boom, the culture of e-commerce that was actually rising as at that time in early 2000, and there was that growing demand for secondary ticket sales where apart from buying tickets directly from event owners, there is also a marketplace where people can buy tickets because people don't make up their mind early to go for an event or to attend a show, or they don't have their calendar properly sorted. So the secondary market gives people that opportunity to buy tickets whenever, however they want it. And that movement, that trend of people doing late or early bookings actually spur that business StubHub, and as well some of the other competitors that we'll be talking about on this episode. So in 2007, about 7 years after StubHub started, eBay acquired this company for about $310 million. They integrated this business StubHub platform into the eBay marketplace ecosystem. But around that period, eBay was actually expanding, and StubHub acquisition and integration into the eBay platform was actually very good to take it internationally, and also add value to the eBay platform. But around 2020, eBay, actually sold this business for a very good profit. Around that time, in 2019, Viagogo actually, acquired StubHub for all cash transaction for about $4 billion, and that was actually when this business started seeing much more interest because it was an all cash transaction. So on that trajectory, the business actually rebranded itself to StubHub Holdings, and the company actually has shown some growth. Around 2024 last year, the company reported about 1.7 billion dollars or 1.8 billion dollars in revenue. They also secured about 1.5 billion dollars in private funding, which is now preparing the ground for this IPO that we're talking about. So that's basically the history, the background of StubHub, and they will be listing on the New York Stock Exchange on that ticker symbol STUB, which is Sierra Tango Uniform Bravo. STUB, that will be the ticker symbol. So we are going to go ahead to look at other aspect of what you should actually focus on when it comes to making your decision on this IPO. So it's always also very important for you to actually understand the business itself. How does this company makes money? Because you are an investor, you don't necessarily just want to buy the ticker, you want to buy the actual business. So StubHub actually operates, like I said, as an online marketplace for reselling tickets. It's more the business actually make more money from the actual resale of tickets. So the primary source of revenue comes from service fees charged on transactions between buyers and sellers. The company actually benefits from high margin nature of secondary ticketing and its brand name. If you also look at the management structure of this business, Eric Baker is the co-founder. He's also leading that management team. Post IPO, this business is also likely to maintain its traditional kind of structure. Competition wise, when you look at what this business is having to contend with, and this is very, very important. Live Nation is the hegemon, is the juggernaut of that ecosystem, of that segment. They own Ticketmaster, which Live Nation owns Ticketmaster. Live Nation is quoted as a public company, one of the most inspiring, story on entertainment business in the stock market, and they have that giant dominance. We also have SeatGeek. They are a rising competitor. They leverage that technology as well. We have Vivid Seats. They are also a major player in ticket resales. So regulation wise, this business, is actually facing a whole lot of regulation. But before I delve into that regulation aspect, I'm going to actually talk more about the valuation, what you should expect that this business will be listed, the value of the company itself, because that's very important. Because if this business is overvalued, you might actually be paying so much, and when the market digests the business figures, data, and balance sheets and profitability data over the next couple of quarters or years down the line, you might actually be having less in terms of the value of what you've invested. So it's always better to understand what this business is valued at. Is it really worth what is valued at? We are going to be looking at like for like some of the business that have listed that are competing directly with StubHub, and what exactly they've done over the period that they've listed, especially when we now have a new competitor that we are looking at. So StubHub, they've not fully disclosed the actual figure of the valuation, but analysts are already looking at a valuation of about $4.05 billion, which could be in the north of $5 billion to $6 billion, but it's yet to be seen. This business has a very, very uphill task, if you may say so, especially looking at the juggernaut, or the likes of Live Nation, that they are quite diversified, and they also run a very, very robust, ticket sales platform called Ticketmaster. Almost a whole lot of people actually know Ticketmaster. So I will also be looking at the balance sheet as well before we go into my verdict on this IPO. So the balance sheet of this business is more or less a mixed bag. In 2024, like I said earlier, about $1.8 billion was the revenue reported, which was about 29% higher than what it did in 2023. However, for that same year, there was still a net loss of about $2.8 million. So this is not a profit making business. That's why the fact that this company has existed since 2000, and it's changed hands from from eBay to Viagogo. Now they're coming to the public market. The path to profitability for this business is still very, very a bit neither here nor there, because if you look at what they are doing in terms of revenue, they only grew about 29% last year. Are they able to do about 35% this year? Even if they do that, are they able to actually make profit? Because the cost of doing business now is still very much elevated. Inflation is still not yet very muted. It's still there. It's still latent. So the path to profitability for this company will actually depend on how they can increase that revenue. If they can get the growth to about 50% and keep their operation cost, which is very, very difficult given the climate that we are in. But if they can balance revenue growth with operational cost reduction, this company, at least in the next 6 months or a year, can actually start declaring profit. So regulation wise, which are part of the risks that you should actually look at, there might be stricter policies and regulation. Ticketmaster has faced so much scrutiny, especially Live Nation, which is the parent company of Ticketmaster. They faced so much scrutiny, a whole lot of class action suits, a whole lot of regulation within the US, outside of the US. Consumer sentiment, high ticket prices, higher fees on their platform might also, hamper the growth prospect of this business. And so, economic downturn, if the US does not avert a recession, there will be a huge drawdown in the valuation of this kind of company, because they are discretionary businesses that people, the average consumer will only go to events, only go to concerts and all these kind of experiences when they feel they are more financially buoyant, even if they do it on credit. It is that expectation that they are more financially healthy. That's when people actually, spend so much on consumer discretionary, products or services like this. So that's really some of the headwinds, but the opportunities are still very much there, because increased demand for live events has actually, we've seen an uptick, and now that we are now fully in post-pandemic, events are just about everywhere, especially even outside of North America. Expansion into other markets, in markets like sub-Saharan Africa, like Nigeria, where you have Dirty December, in South Africa, in a whole lot of other market in Southeast Asia or West Asia. A whole lot of this expansion can actually help the business to leapfrog into that profitability. Also, the leverage. If they can leverage AI, they can keep their cost low and also optimize their revenue. So the opportunities are there. People want to travel more for events. People want to actually explore the world better than before now. So those are the opportunities for this business. And now I will go to my judgment about this IPO, because it's very, very important for us to always look at, even if this business has a very positive case for investment, if it is so compelling for you to invest in this business, you still have to actually understand how to value a business when they're coming to the market, whether it is the right time to buy immediately when the IPO is executed or listed, or you have to actually see the numbers and see how this business can actually execute in line with all the plans that they set out in their filings for the IPO. So for me, the strong revenue growth in a high margin industry is a pro for this company. It's part of the pros for this company. That 29% is it's not bad, but it shows that they are able to actually grow. They have that brand name, and they also have that user base. Also, there is a very, very solid case that we are going to actually have more events, more experiences, more access to outgoings, and so many people experiencing things now that we are no longer having anything to do with pandemic and shutdown or lockdown and all that. So this business just has that tailwind to fly on. This business on the con side, it's not yet profitable. This could actually be a very, very big risk if you don't necessarily take your time to understand how this business is going to perform in the public market. So, for me, I don't necessarily buy IPOs. I buy them over time. Unless there's a momentum pushing the stock, maybe inflation comes down drastically, the Federal Reserve cut the interest rate aggressively, and so much risk on appetite is in the market. So you can ride the momentum for this kind of stocks, but you also have to actually, you shouldn't time the market. You shouldn't also take that risk if you don't understand the dynamics. So for me, it's not yet a profitable company, so you should be ready for the long ride, and it's going to be very rough. The company also faces some regulatory scrutiny. Like I said, is a very highly regulated industry, because when people book experiences and tickets and there is a problem, they will head for the law courts. They will go to representatives, the media and all that, and there's a whole lot of backlash that comes with this. So competition from Ticketmaster, we can never underestimate Ticketmaster's position in the market. It's just more or less, Ticketmaster has more or less built its business to become the Apple of the Apple or Nvidia of event or live events. So StubHub is a very, very small business compared to Ticketmaster. So is Ticketmaster going to use this opportunity to acquire even competitors, or ramp up marketing and also a whole lot of activity to stamp out the threat of StubHub, if they even pose any threat at all? So for me, my final verdict is, it could be a very short term kind of investment if there's a momentum pushing IPO stocks, or pushing this stock, depending on the macroeconomic climate that we're going to have when this stock finally lists on the market. But if you are a long term investor, I will suggest that you actually wait and see, to actually see if this business is going to be profitable. A whole lot of regulatory risks. The IPO price might also be too high, so you also want to actually maybe have some strategy. It could be an option strategy where you can actually have some contract, medium to long term contract. So maybe the contract that expires for 2026, or early 2026 or mid 2026. So that you don't necessarily buy this stock when it is elevated in terms of capital valuation, and you can actually have an option strategy. But if you don't want to buy it from an option strategy, maybe you don't understand how that works, you can actually see wait and see, and you might actually have better opportunities to buy the stock. I'll show you a chart to see how Live Nation has performed, how Eventbrite, which is also a competitor, and we'll close it on that note. So come with me. So here is the all-time performance of Eventbrite Inc. Eventbrite doesn't necessarily do exactly direct. It's not a direct competitor to StubHub. However, they are also into event booking because Eventbrite is more of event organizers selling tickets directly, or the attendees or the guests actually booking, buying those tickets. It's not necessarily a strong secondary market, but they still do almost exactly what StubHub does. But Eventbrite has not performed very well. It has lost over 93% of its value since this company was listed, which was around 2018, that this company became a public company. So Eventbrite hasn't really performed very well for investors, and that's why you also have to be very, very mindful of how you jump at IPO stocks. Eventbrite could still bounce back, or it might actually be a company that will be sold or acquired anytime soon. I'm not too sure if Ticketmaster is even interested in this, because Ticketmaster has just executed very well. Let me show you what Ticketmaster has done. Ticketmaster, like I said, is more or less like the Nvidia or Apple of live events, and successful company, successful execution. They've delivered shareholders value, all time high over 1,000%. Even year to date, despite a huge drawdown in various discretionary stocks and all that, they are just down by about 1% or 2%. In the last 1 year, about 19%. So to bring it to a close, what do I expect about this talk? Like I said, my verdict is a whole lot of headwinds, a whole lot of opportunities on how they can execute, they can create experiences, they can actually enter more markets, like I said, but it's still a non-profitable company, and I will be looking at this company maybe 6 months or thereabout, or if there's a momentum, I can have a short-term option strategy, maybe a call strategy, just to say thank you so much for watching. If you have enjoyed this episode, please subscribe to our channel, put on your notification bell, and also give this video a like, because it will actually help us to reach more people. Thank you so much. Keep investing, keep growing. Take care, and bye bye.